Hello and welcome to Vox Markets, and it's the Bulletin Board Heroes for Tuesday, the 24th of May, rather earlier than usual as I'm off to Birmingham. If I don't make it back, then please follow Noel Borg as my substitute going forward. Starting off with Amigo, where we've got this rising trend channel. It's been in place since December. Top of the channel, they're heading for 12 pence. Obviously, this is a bit of a binary bet, to put it mildly, but above the 200-day line, or perhaps above the initial May resistance at 8.19 pence, looking for 12 pence perhaps by the end of next month, which would be quite a result given that we've been down at 2 pence not too long ago. On to a rather more sturdy fundamental picture at AfriTin. Here you can see that we've had a gap higher for the shares. We had a bear trap rebound off the 200-day moving average. I suppose the shares did slip lower than they were expected to go. But 200-day line is a sort of a normal thing to happen there, and that's what we've had here. Overall picture here is that above the 200-day line, so above 6 pence, looking for at least a retest of April resistance around 9.5, and the big picture target maybe over the next 1 to 2 months as high as 14 pence. But the gap higher today, if it remains unfilled and with an end of day close above the 50-day moving average at 7.75, would be a decent continuation signal. Stock which has been rather in the wars today, or rather of late, is Celadon Pharmaceuticals. Here we've had, though, a bullish divergence with the lower low for May versus March, which has given us a bear trap rebound. The old low in March around 93 pence. Above that, we're looking for a 125 pence target initially at the 50-day moving average, and that bullish divergence there in the RSI window, which is actually quite a strong divergence, given how much low we went in May, could power the shares up to not only 125, but maybe a bit higher than that as well, maybe through the 50-day line towards 130 to 140, something like that, and maybe as soon as the end of next month. Moving along to a stock which is always very popular when it's looked at, HeliumOne, and again, just the signs of a new phase to the upside here. We've broken that line of resistance there from April. That was around 9 pence, and above 9 pence looking for not only a retest of April resistance at 12, but maybe up to the top of the range at 16 over the next 6 to 8 weeks, something along those lines. But ideally, no fresh lows below 8.5 there for HeliumOne. Ironveld, stock which came up with an update today, nice gap to the upside. Let's see if the shares can hold it. Had a falling line of support there down towards 0.7 pence. Above 0.7, we're looking for 1.1 pence, which is March resistance of the best case scenario target, 2-month target as high as a 1.4. That gap, though, in the bear trap below January support does suggest that a decent turning point has been reached at Ironveld. On to iNexus, and here we've got another gap to the upside. Above the 50-day moving average at 4.8 pence. That's also 4.8 pence was also the old support. So we've had a bear trap for the stock over the course of March and April. Above the 4.8 pence level, though, looking for at least a retest of 7 pence, which is May resistance at the moment, and hopefully that's over the next couple of weeks. Just a couple of stocks to go now before I have to rush off today. First one is Pelatro, and that's a clear trend line break. Double gap to the upside, rising 50-day moving average. So that does suggest that we've got legs to this particular recovery. In fact, there's bullish divergence there as well with the lower low for the second half of May there. Above the 50-day line at 21 pence, we're looking for at least a retest of the initial 2022 resistance at 35 pence. On to finish with Simek, where there was such a big deal announced today. We had to have a double take of it. But another gap higher and above the 200-day moving average at 2.3 pence. Looking for 5 pence, which we were actually looking for before the announcement, which is intriguing. And 5 pence filling that gap down from September. And maybe we see that by the end of next month, but especially while we're above 2.25 for Simek. That's it for me today. More updates tomorrow.